guys, welcome to your market report for this Friday, July 20th, 2018. And listen, here's what I want to talk about. A canary in a coal mine. Have you ever heard that saying? Right? Let me start the charts right here, and let's take a look. What we're looking at is, let me move this out of the way as best I can. Anyway, let's center these charts down a little bit. As you can see, these are pictures of canaries in coal mines. And in the old days, what they used to do was they used to take a canary in a little cage down into the coal mine with them, the miners. And what the job of the canary was canaries, when they smell gas like, they're very sensitive to gas. They're very sensitive to carbon monoxide gas and different types of odorous gas that can kill a man. And they will die way ahead of the man dying. They die first. They die much quicker. So this was the old saying that came from that, from the miners used to use canaries. And it was a good working system. It actually worked good. If the miner looked over and seen the canary dead, he'd yell, "Everybody get out of the mine," and fast, because there's gas in here. It was an early sensing system. Now, where I'm going with this is I want to talk about a canary in the coal mine to the world's financial system. When deflation starts to rear its ugly head and there's an economic slowdown actually starts, they can go and they can talk all they want. They can scream and they can yell that we're in a recovery and everything's great and everything's grand. Right? But the indicator, that would be like a bunch of miners in the mine yelling, "Hey, everything's great, it's wonderful in here." And the other miner says, "But listen, the canary just died. We don't smell anything." "Yeah, but he says the canary's just died. Let's get out of here." Because there's gas built up, and he can realize it because the indicator is showing him that a problem's starting in the system. Well, I'm going to show you the indicator right here, right now. Here's your indicator right here. This is your canary in the coal mine. And the reason why, it's the copper price. And the reason why this is the canary in the coal mine is because copper is used in almost everything. When you build a new house, they put copper wires in the house. You'll see the electrician snipping off the copper wires and then taking the little pieces that's left over in for scrap to sell it. You know, when they're done, the cuts, all the cuts, they collect all the cuts and they take them in. Possibly an electrician that's working from day to day would collect those cuts and trimmings up until he gets a big heap of them, and then you take them into the scrap dealer and sell them for the copper. But it's used in industry everywhere, and you see, when copper prices decline, it's an indicator that industry and the world's economy is actually slowing down, right? And that's just what we're seeing right now. We're seeing the canary in the coal mine to the world economy. We're seeing a very, very steep decline in copper prices. And this is the canary in the coal mine. It comes ahead of everything else, ahead of all the other indicators. This one's first. This is the canary. And so anyway, I figured I'd show that to you guys this morning, and now we're going to get on to the silver price right now. Okay, so silver is trying to claw its way back this morning. It's at 15.39. It's up 11 cents on the day from these terrible lows. Oh my goodness, the low here was like $15.15. Terrible low, you know. And now it's clawed its way back up to 15.39. 15.39 is actually looking a little bit better. It can claw its way up a little bit higher. Now let's take a look at Bitcoin. What's going on with Bitcoin? Okay, we're at Bitstamp right now, 74.55. Now, here's something that you need to notice is Bitcoin hasn't really fell off from this $7,500 price. It came up to it rather quickly, and it's went along and it's stayed pretty stable at the $7,500 price. But the market capital for cryptocurrency, let's go over to cryptocurrency market caps right here. Cryptocurrency market capital has actually fell back a little bit, and the Bitcoin dominance has actually increased a little bit. So the Bitcoin price hasn't fell off, but what's fell off is an awful lot of these altcoins. A high percentage of them fell 3, 4, 5%, as much as 7%. Stellar's off 7%. So what we're looking at is a drop off in price, and some of these are off as much as 14, 15%. Some of these alts, but you see reg numbers across the altcoins. With a few tiny exceptions here and there, like Dash, 2.88% up. But Dash was probably a little bit undervalued. So we're looking at Bitcoin dominance increasing. Now, let's take a look at, because we're waiting for the Dow Jones to open up. We're 5 minutes from the Dow Jones opening up. So let's take a look at bonds and rates today. The long end of the yield curve is going up today a little bit, and the short end is falling. So this works against a flattening yield curve today. What's happening, the action in bonds with the long end going up and the short end falling, but the numbers aren't real big. They're not substantial. But it's a move. It's down back. The U.S. 3 years back down under 2% again. Let's take a look at the U.S. dollar index. The dollar's falling today. It started falling at about 8 o'clock this morning, and she's fell off. She's back down to mid 94s today. The U.S. dollar index. And so now let's take a look at the Dow Jones. We're looking at yesterday, what's going on yesterday. So we're going to take a quick look at oil while we wait. We're at 26, got 4 more minutes. Okay, crude oil, $69.81 today on the day. I'll tell you what I'm going to have to do, guys. I'm going to have to do a little edit here. Generally, I like to do this in one take, but what we're going to do is we're going to come back and give you the Dow Jones as a final on it this morning. So okay, we'll stop at the charts right here, and we'll be right back with the Dow Jones when they open. Okay, I'm back, guys. Let's start the charts here. Listen, first thing I want to talk about is Trump here. He's talking about he's ready to go on $500 billion in tariffs on Chinese imports. He's threatening to put a trade tariff on every single product that the Chinese make. So the Chinese are, I guess, the last few days they've been knocking their yuan down in price to try to make imports more. This trade war is escalating into something much bigger, guys. It really is. It's escalating into something much bigger. The whole underlying economy. Listen, here's what I can tell you right now is, in China, you know, the Chinese real estate market is just, it needs this money. Look, China's used to a certain amount of money coming in every year from America in selling America everything from soup to nuts that they create in these shops, these sweatshops in China. If trade tariffs go on an awful lot of these goods, it's going to make American goods more competitive. And what's going to happen is China's going to lose business. China is going to try to hit back with retaliatory tariffs, but the world's biggest consumer is America. I mean, where all this is going to end, I don't exactly know, but the world's economy is extremely fragile, and Anyway, well, I'll tell you what. We should have the Dow Jones Industrial Average open now. Okay, so let's take a look at it. Let's refresh the page. It should be on right now. Yeah, okay, we're down 54 points on the day so far. And 25,010, we're down 54 points. This market is kind of range bound right now, but when the fireworks begin, is like I say, when the U.S. 10-year hits 3.25%. Now, I've been saying that for quite a while. This is when the market's going to start to get unstable again. But now, when's that going to happen is the next question. And we should be looking at that happening. This summer, the bonds have been holding roughly stable most of the summer so far. I think this is a temporary thing. I think they're going to start moving again pretty soon. Very soon. I'm expecting them to start moving again. And when the movements come, I think they're going to be fairly quick. So be prepared for it. Now, this has been your market report. Thank you guys for listening. And we'll catch you again on Monday. Bye-bye for now, guys.